If you have not noticed already, the stock market is starting to shift, and one of the areas that it is shifting to is the financial sector. But exactly why is that the case? Why is it important to consider investing there now? And as always, what are the best stocks to invest in that sector? Let's go ahead and break it down. It is always important to understand why you might want to invest in something. So the first thing is, what are the 3 reasons as to why the finance space is doing so well and why it might continue to do so in 2025, and the issues as to why it could be tumultuous or turbulent. All right, so the first thing is regulations. What we know right now, given how Congress is, how the courts are, and what the White House is doing, we know this. The finance space is very highly regulated, and we do not expect Congress to tighten regulations on the financial space, which is good for most financial stocks, and that's because they know things aren't going to change. And most investors in the stock market in general likes predictability. So if you know you're not going to get any new rules, whether they were going to help you or hurt you, you know what to expect. You can just continue doing what you was doing. That is the expectation here. So that's number one. The regulations are going to be in your favor, and you know exactly what to expect for a minimum of 2 years because midterms. So that's number one. Then you've got tariffs. I would surmise that tariffs won't be, or shouldn't be rather, a major impact for the financial sector. So you are somewhat neutral. You don't really sell goods and services. You're not, or you sell services obviously, but you're not really sending that kind of stuff overseas. You're not a Walmart, you're not a Target or anything like that. For example, we just got word, and the market's still open at the time that I'm doing this, you're not sending things overseas that are subject to tariffs. That doesn't really matter to you. You are selling a loan, you are doing mortgages, you're helping a company go public. It doesn't really make a difference to you, right? If you're selling insurance, so what? That we got another 10% slapped on China, right? That did happen within the last 24 hours, okay? So that doesn't really have an impact on finance stocks, which is helpful to us as investors. If you are changing your portfolio or you're worried about that space, you can say, hey, I might want to sell out of this area and move towards finance if that is a concern and you want to diversify just a bit more. Then you've got interest rates. Right now, interest rates are low. Okay, interest rates are low. We'll see if that is going to continue. They may or may not be cut. We'll see where that goes the rest of the year. At the current moment, if interest rates stay normal or if they are cut, this usually helps finance stocks because they are going to continue to encourage people to buy, encourage people to borrow. If you are a credit card company, for example, if you are a bank, for example, this encourages people to borrow from you, and that is going to help your bottom line. That is why finance stocks are doing so well. Which ones should you consider buying? First, you might want to consider Ameriprise. The stock symbol there is AMP. They are an insurance company. Remember, it's not just banks in finance stocks, although that is what most people consider. But again, Ameriprise is up 18% in the last 6 months and up 29% in the last year. I will also put what the S&P 500 has done in the same time frame, last 6 months and last year, just to give you context. Ameriprise has done better than that. Otherwise, it wouldn't be on this list, right? But just to put it on screen, just to give you that. Again, these numbers will change based on when you're watching it and how the market is moving. But Ameriprise is the first one on our list. Then things get a bit more interesting, and boy, do they get interesting as we go through. You got Visa. I put an asterisk next to Visa on my list. Stock symbol here is just V. Up 30% in the last 6 months, up 27% over last year. Visa has the best momentum of the list, the freshest momentum of the list. What do I mean by that? Some of these stocks have been doing very well for a very long time. Otherwise, it wouldn't be on this list, right? But if you were to look at a chart of Visa or something like that, you will notice that, it feels like I'm somewhat early to the party. And you can kind of see that by the fact that it is up more in the last 6 months than over the last year, right? It's kind of how the math shakes out. So it feels like, hey, Visa has a lot more strength behind it, and it might last a bit longer. Now, that's more of how I'm interpreting the numbers. There's nothing to say that just because it is up higher in the last 6 months than over the last year, that is supposed to do that or anything. That's just more of a perception thing and how I am interpreting the chart behind it. Okay, that's just how I'm interpreting it. That's just me. But I have an inclination based on my skills and experience, if you want to call it that. I feel like they have a bit more life into it and it could last a bit longer than some of the others on this list. Take that how you wish. There is a lot of noise in the investing world, and it can be overwhelming to figure out what to invest in, how to start, and how to be consistent. Because of that friction, that fear, and that frustration, some people decide not to invest at all, and that means that you are not going to be able to grow your wealth. Well, what if there was something, an app perhaps, that can help you to invest and make it easy and to help you be more consistent as an investor? That is where M1 Finance comes in handy. You can choose your investments and set a target, how much you want to invest in each stock, and they will take care of the rest. Or you can choose one of their pre-made investment pies. For example, right now, this is an 80-20 portfolio. This is a good mix for me, and I've added it, and I am good to go. You can also get a higher interest rate on your uninvested cash with a high yield cash account. With my link, you can get an extra 0.5% on top of the current rate. Check out M1 Finance with the link right here. All right, back to the video. All right, but I do like Visa a lot. Next here is Northern Trust. Now they do a lot of stuff. They do asset management. They do a little bit of banking. They got their hands in a lot of places. NTRS is the stock symbol here, up 22% in the last 6 months, up 35% over the last year. They are, I would say, relatively unknown, relatively under the radar. Y'all let me know if you've heard of them before. When I came across on my list of stocks as I sorted things out, I thought it was a railroad company. It was not. But this is one that I would definitely dig more into if I'm looking to have more finance stocks. The finance stock that I currently own and have the most money in was doing well until I found out today that it was not. And I found out by accident. Sidebar, okay, it's tax season. Yeah, get out your tax form. So I had to log into my Fidelity account, pull up my tax forms, which by accident it showed me my account. And KKR, asset manager, had done quite well. We had talked about it, and it was doing really good. And then it just took a dip, I think, like last month or so. So I'm going to continue practicing my own advice and hold on to it, and we'll see what happens in June. So maybe it'll recover. It should, right? It follows all these things, so we'll see. But it wasn't fun. All right. Next here is Discover, up 45% in the last 6 months. Very, very good number. And then up 59% over the last year. Now, if I'm not mistaken, I'm pretty sure they were in a merger deal at one point with this company, which is Capital One. COF is the stock symbol. And again, up 39% in the last 6 months for Capital One, up 45% over the last year. I told you, things were going to get a lot more interesting between these two, or between this entire list. Now, Capital One I used to work Capital One back in the day. 10 years ago now. Ooh. You ever just feel old when you talk? It's just like, man. All right, that hurt. That hurt a little bit. But I'm sorry. But for Capital One, they are both, I assume the banks are still open. I don't know. At this point, it was so long ago. But they are a bank and a credit card company. And they are, I would say, sizably larger than a Discover that also has an online bank. Capital One just ain't an online bank, right? They had ATMs, they had bank branches, and at one point they were one of the top 10 regional banks out there, kind of like a PNC, if you will. If you're in certain parts of the country, PNC is third in line. It's Bank of America, Wells Fargo, Chase. It kind of makes it fourth now, right? PNC. In some regions, it's bank 1, 2, 3, and 3 would be Capital One, depending on where you are. So Capital One is up there. Obviously, its returns justify it being up there as well. So you got Capital One and Discover. Discover was DFS. Then we go even higher in terms of notability or prestige, whatever it is you want to call it, in the finance space. And now we are at Goldman Sachs, an investment bank, up 25% in the last 6 months and up 64% in the last year. Now they are in a different class and category. An investment bank is really there to help these companies bank, right, versus us. I wouldn't call them a credit card for some of these bigger institutions, but if you are a company looking to go public and put your stock on the stock market, you go to Goldman Sachs. And the market right now is better for companies to go public than what it was during the pandemic, for example. So that is where Goldman Sachs is. Their stock symbol is GS. And then perhaps my favorite stock here on the list outside of a Visa, and it's a hard race between those two, Visa and BK. That is the Bank of New York Mellon. I don't know why it's BK. I would need to look into the history as to why that is the stock symbol. Brooklyn, maybe. But 28% is the gain in the last 6 months, 58% gain in the last year. That's a great number. That is a very, very good number. Why did I put an asterisk here? Why is it one of my favorites? That is because there is very strong insider buying activity. What is insider buyers and why do I say it is very strong? Insider buyers are when you have the big wigs buying this stock. We're talking CEOs, people who make the major decisions in the company, people who have more information. We had all talked about what Nancy Pelosi was doing and how much money she had made, so on and so forth. There are studies that confirm that when they buy, if you track the date that they buy versus the S&P 500, they make more money. Because it's only one reason why you would buy, and you know your company, you know your landscape better than anybody else. Here's the thing. Not only do we see a lot of insider buyers for this company more than these others, it is by a factor by 2x, meaning I see 2 times more buyers for BK, I want to say Burger King, but for Bank of New York Mellon than what I saw for sellers. That is telling me, for example, if there are 20 insider buyers, there are only 10 sellers. And this was both in the last year and in just the last 3 months. They know something. It's only one reason as to why you would buy. It is only ever one reason as to why you would buy. You can sell for all types of stuff. Taxes, bills, I was going to say groceries, but you don't really sell a stock for groceries, but you get the point. Lots of reasons as to why you would sell. Only one is why you would buy. And that tells us something. Now, you don't want to just do it just because they did it, right? They get discounts because they work there and stock options and all kinds of stuff. So continue to do your research. But it does say that they have a lot of confidence in it. You might want to dig into it. And it's obviously got some other things going for it. Being in the finance space, having momentum. Also, it is near its 52-week high. Guess what? We had just talked about why that's important, why it could be a very good indicator of where the stock could go next. If you want to know why the 52-week high is such a good indicator and how you can learn more about it, check out this video next.